What if $50,000 wasn't meant to be invested at all, but weaponized as a piece of paper that unlocks entire businesses you never have to pay for? Grant Cardone just told Vlad TV he wouldn't touch stocks or crypto with that money. He'd use it as proof of funds to take over someone else's cash flowing operation. And the strategy is so brilliantly ruthless, it's making people rethink everything they know about starting from scratch. Here's the play. You find a tired business owner running a laundromat, a small apartment building, a tattoo shop, something unglamorous but profitable. And you walk in with that $50,000 printed on a bank statement like it's a golden ticket. You don't hand it over, you just show it, proving you're serious. Then you structure a deal where the owner keeps their baseline income, say $50,000 a month, and you take everything above that threshold plus full control of the business without writing a check up front. This isn't some nouveau riche crypto gamble or a meme stock prayer. This is old school leverage disguised as partnership, where your $50,000 becomes the credibility that convinces someone to hand you the keys to a machine they've spent decades building. The owner gets to step back, keep getting paid, and you get to run the operation, scale it, optimize it, and pocket every dollar of profit beyond their guaranteed slice, all because you had the audacity to show up with a bank statement and a pitch. But here's where the fairy tale starts cracking. Most people hear this and immediately imagine themselves as the next real estate mogul, strutting into mom and pop shops with a briefcase full of confidence, when the reality is that structuring these deals requires legal sophistication, negotiation skills, and the ability to spot which owners are actually ready to let go versus which ones will cling to control and make your life a living nightmare. The psychological gulf between watching a Vlad TV interview and actually cold calling a tattoo studio owner to propose taking over their life's work is so vast that 99% of people never make the first call. And the ones who do often discover that the tired owner ready to step back is a mythical creature rarer than a profitable NFT project. The enthusiasm around the strategy has that familiar gold rush energy. Everyone's suddenly an expert on seller financing and creative deal structures, flooding LinkedIn with posts about how they're going to quit their job and become business operators. But 6 months from now, most of those posts will be deleted and replaced with humbler updates about focusing on W-2 income for now. We've seen this pattern before with Airbnb arbitrage, with Amazon FBA, with dropshipping, where a charismatic figure shows a path that looks deceptively simple and the masses charge in without understanding that the strategy works for people with specific skills, networks, and risk tolerance. Not for everyone with $50,000 in a dream. Listen, I'm not saying Cardone's strategy is wrong. It's actually brilliant if you can execute it. But the gap between hearing about creative deal structures on a podcast and actually closing one is filled with months of rejected offers. Owners who back out at the last minute discover hidden debts, equipment failures, lease disputes, and the soul-crushing realization that running a laundromat is just as much of a grind as your day job, except now you're personally liable. The people who succeed with this approach are often those who've already built businesses, understand operations, can read financial statements in their sleep, and have the stomach to manage employees, vendors, and customers in industries they knew nothing about 3 months ago. This whole phenomenon fits into the broader cycle of entrepreneurship hype, where every few years a new hack emerges that promises to shortcut the traditional path of saving, investing, and building slowly, and it works spectacularly for a tiny percentage. While the majority learn expensive lessons about why most businesses fail within 5 years. The community response has been predictably split. Half the comments are people tagging friends saying, "We should do this," while the other half are seasoned operators pointing out that if it were this easy, every CPA and lawyer would be running laundromats instead of billing hours. And that gap between perception and reality is where most dreams go to get a dose of humility. Here's the misconception everyone needs to abandon immediately. Proof of funds is not the same as having leverage in a negotiation. And showing someone $50,000 doesn't obligate them to accept a deal where you pay nothing up front and take control of their business. It just gets you in the door to pitch And most owners will laugh you out of that door unless you're bringing operational expertise, industry connections, or a growth plan that genuinely makes their life better. The fear that I don't have enough money to start gets replaced with the more accurate fear that I don't have enough skill to execute. And that's actually a harder pill to swallow because you can't fix skill with a bank statement. If you're genuinely interested in this strategy, the historical lesson is simple. Focus on industries you understand or can learn quickly, target businesses with clean books and motivated sellers, get a lawyer who specializes in creative deal structures, and be prepared to walk away from 99 deals before you find the one that actually makes sense. The moderate risk here isn't in the strategy itself, but in deluding yourself that watching one interview makes you qualified. Start by working in the type of business you want to acquire. Understand the operations from the inside. Then approach owners with the humility of someone who knows they're asking for an extraordinary leap of faith, not the arrogance of someone who thinks $50,000 is a magic wand. The disciplined approach means accepting that most deals will fall through, that your $50,000 might sit in an account for months while you search, and that the unglamorous reality of running a small business, chasing late payments, fixing broken washers, managing difficult tenants is the price of admission for the cash flow everyone romanticizes. Position sizing matters here too. Don't quit your job to become a full-time deal hunter unless you have runway to survive a year of strikeouts. And don't structure deals so aggressively that you leave no margin for error when the air conditioning dies or a key employee quits. Because over-leveraging yourself in the name of taking action is just gambling with extra steps. Philosophically, what Cardone's strategy reveals is that capital is often less important than credibility. And credibility is less important than the ability to identify and solve someone else's problem, which in this case is the owner who's exhausted but still needs income. The real edge isn't the $50,000. It's the rare combination of confidence, competence, and communication that convinces someone to trust you with their legacy, and that's something you can't buy or fake, only earn through preparation and pattern recognition. At the end of the day, whether this strategy works for you or becomes another expensive lesson depends entirely on your ability to be honest about your skills, patient with the process, and disciplined enough to walk away when the numbers don't make sense. Because the graveyard of failed entrepreneurs is filled with people who had great strategies but terrible execution. I'm comfortable with whatever you choose because the path to wealth has never been one size fits all. And if this approach resonates, then go study it obsessively, practice the pitch, build the network, and accept that you'll probably fail several times before you succeed, which is exactly how every real operator learned to operate. If you're serious about finding investment properties, or you're a business owner looking to list your operation, check out our directory at www.growthsense.com, where investors connect with opportunities, and don't forget to subscribe to our newsletter to stay updated on strategies, market analysis, and announcements from our channel.